Hi Financial Hub traders, welcome again here to our channel and the 18th episode of our financial market breakdown. So today we won't be covering much. I'll be covering gold and Aussie dollar together with my friend here Dominic DeCoco, a friend of ours who he's always watching the charts here with us and he's been watching the markets for the past now 1 year. But apart from that, I'll be covering, as I've said, gold and Aussie dollar, and Ken will come in and analyze the other markets. I'm basically focusing on those two because they're high probable setups that I have, and next week maybe we'll cover EA and other pairs. So apart from that, let's go deep into the markets. So yeah guys, this is the gold analysis that we have, and allow me to turn Dominic just to watch with us. And if you watch closely what we had last week, and we had a beautiful analysis last week and we're waiting for that shot to happen, which beautifully happened after touching the trend line 3 times, as you can see over here. 1, 2, 3. That was a beautiful third touch. At first our line was touching the wicks, as you can see over here. We had the wicks touch, which the market came slightly below it, so we adjusted our trend line down to touch the bodies of the candlestick formations. So we had a beautiful short position. This is the daily chart. So the daily chart, this was on Thursday and Friday. We had a beautiful close which engulfed the previous candlesticks, 1, 2, and almost engulfed the third candlestick, so showing that we had a very strong bearish momentum, followed by a shooting star formation which came back up to retest our MAs and that beautiful red candlestick that we had yesterday, which sort of formed a pin bar formation. And why did it do that? If we look closely, I covered in our video last week, and I'm sure I've shown a bit of it in the video. We came and found resistance along this level, which I covered in the video on our Telegram, which has been a major resistance level for some time. We can see within this channel we had the first bounce, second bounce. There's likelihood that we might have another third bounce. So we are still waiting for the market to spike upper levels, maybe even touch 1310, between 1308 and 1310 before we get that strong downward momentum and we enter the market to go short. If we look back into history and what happened when we had the bull run, is that we came and found consolidation over here for a very long time. This is the daily chart. We had about 10 or more candlesticks of indecision. The market didn't have direction. Then we had that beautiful bullish engulfing which broke to the upside and went all the way to 1340. We had that beautiful downward momentum, came and found resistance at this level yet again at 1285, 1280 region, came back up, and now we had that beautiful downward momentum, found resistance yet again, 1285, capped this level beautifully, and now we might see sort of another consolidation around this region. And if I get rid of this, just to make it clear, you see we had this beautiful spike closing as a pin bar formation. This shows that this level is a very strong liquidity level, and there are many orders at this level, this region around here. So just having that clear analysis of what is going on, we might see another consolidation around here, and maybe if I draw it, we might see some consolidation around here. We're not sure for how long before we have that strong move towards 1265, which is our ultimate target region. That's what we're waiting to hit before we change our bias, before we have that long and strong momentum to the upside. So if we go down to our 4-hour charts, so according to the 4-hour chart, when we had this beautiful downward momentum, which we're currently riding this short position, we got a beautiful entry above here. Our stops moved past break even. We are currently running this trade as a risk-free trade. We had a beautiful move to the downside, so that gave us a good confirmation that the strength to the downside is really strong. We also had a good confirmation that we could have entered long. We could have entered short yet again once we broke this region. As you can see, I've highlighted it in red. So we had this beautiful downward momentum. The market with this candlestick with the 4-hour chart, we came up back almost retesting 1300, and we had that. It was another good entry to go short yet again. Beautiful short. We were capped by 1290, had this consolidation yet again, as I've shown in the screen, and we had again a beautiful momentum to the downside, being capped by same region, 1285, 1283 level to be exact. came back all the way back up to 1290, and during the Asian session, Tokyo session today morning, we had that beautiful downward momentum, yet again being capped by this region between 1283 and 1285. So what's the ultimate goal of this? We are still yet to, for now we're mainly watching the candlestick formations. We already had that beautiful downward momentum, so we know that the market might garner that momentum all the way down to 1270, 1265 region. But for now we're watching candlestick formation closely, giving us that beautiful entries yet again, maybe to go short, to go long at the same time on an intraday basis. But that's basically what we have on gold. Right now we're just watching the MAs that you can see over here are capping this level. You can see when we came back down, we were capped over here by the MA, came down, we were capped again by the MA. So we're not really looking for long positions on this pair at the moment. We're just looking for those short positions. So candlestick formations are really key, and with the last few candlesticks we've had beautiful almost Marubozu candlesticks to the downside. So momentum is still strong to the downside. If we're able to break 1283, 1285 region, 1280 mark also, we might have that break to the downside, have a beautiful retest, because the market has been moving so strong to the downside. We might have a strong retest to 1283, 1280, then have that beautiful finish down to 1265, 1270. At most, if you go maybe 1250, we're yet to see what the market will show. So that's basically what I have on gold, and maybe you can go down to Aussie dollar. So this is the Aussie dollar chart, beautiful chart analysis that we're having here on the Aussie dollar. And I really wanted to do this so that I can refine the analysis I had last week, and maybe if I show a short clip of what I analyzed last week right now. So what we're watching to see what will happen to get that beautiful entry, still I can say please stay. You can enter into the market, but according to the way I analyze, I'm more conservative, so I'll wait for a better confirmation. So what I'll do before I enter this market, I'll wait for the market to come around this region. Let me just highlight it. Around this region. And why I say around this region is that I'm waiting for a break above this previous, as you can see, this previous highlighted top, this high. So if we break above that level, we'll wait for a retest, maybe even a retest of our trend line yet again if we extend it. Maybe a retest of that, as you can see, then line, and get that upward momentum, maybe to go now to the 0.7225 region. So until we get that, we're still in bearish territory. The market can fall further down, but according to analysis, we're getting that strong bullish momentum to the upside. So yeah guys, that's what we had last week, and I want to refine that by correcting a few stuff that I hadn't highlighted on the daily chart with the bigger time frame. So if you look, we've been actually trending within this downward channel over here. So we had this beautiful top, so we had a lower low, lower high, I've highlighted in yellow. We came and had this spike, this flash crash that we had earlier on this year in January, came back, had a beautiful lower high, and now we're currently being capped by the 0.7025, 0.7050 level. So if we zoom in and take a look nicely, what you can see, I actually wrote over here, higher probability. This is the higher probability analysis that I had, that trend line might hold, to be watched closely in line with trend line retest. As you can see, we've retested the trend line beautifully. We hadn't gone back up, and 61.8 Fibonacci level. So this is a beautiful analysis that I have on Aussie dollar, and getting that 61.8 that you can see over there, which is being hidden a bit, but it's the 61.8 level that has capped this market and might push to the downside. On my previous analysis, I had that push to the upside that I was seeing on the lower time frame. I didn't come up to the bigger picture. And if you look closely, I've drawn a red trend line over here that came, was obeyed over here, obeyed yet again, and we had that beautiful break to the downside. We came and retested it, have a beautiful movement to the downside, then we've come and retested it yet again. So this region where it's a higher probability is that market has been capped by a lot of trend lines. The downward trend line, a retest of this trend line, 61.8 Fibonacci level. If you look at the candlestick formations that are forming at this level, are also sort of a three-pin pattern formation. Not really a three-pin pattern, but we're having that spike to the upside, which we're not really closing up above the trend lines. So I had a lower probability that we might spike 0.7225 before further drop, because the Aussie dollar has been having a lot of news this week. So I had that analysis that we might have maybe a false breakout to the upside, spike that level, and maybe get a touch of Fibonacci 127.2 extension level before we have that downward movement. But that was a lower probability analysis. The high probability, if we have this daily close at this region, we're yet now to look for short positions to go to the downside, and we'll wait for better confirmations. But at the moment, the market is aligning to have that short plays. And maybe if you go down to the 4-hour chart. So if you look at the 4-hour chart, we've respected this channel beautifully, but the channel now is becoming weak. According to how we analyze the market, how we do it in Financial Hub, we analyze the market in such a way we know when the channel is about to be broken. Maybe you can purchase our course, which will help you understand exactly how we know that in the F-Hub community. So we share that with the other people in the group. Our course is still yet to come out. We've not yet launched it, so be ready for that. So we've been capped by this level, as you can see, 0.7189 region, and the market has had that beautiful momentum to the downside. If we're able to break this channel and also break back below 0.7150, then this market is down for downward capitulation, down back to 0.7050. But if we're capped by this level, we might have that spike maybe to 0.7225 before we have that downward momentum. So this week Aussie dollar has many, as I said earlier, news being weighted, and now we'll just wait for that clearer analysis. So that's basically what I have on this pair. So as I analyzed last week, we're not really looking for long plays as much, as long as we respect that trend line, that channel that I've shown on the daily time frame. If we're not able to break up above and close above it, then we're looking for short plays on this pair. So that's basically what I have on my analysis, and I'll leave the rest to Kenneth to cover, and Dominic the Cock over here to cover with you, and we'll see you guys next week.
So hi guys, hope you're well. This is the 18th episode of the Forex Market Breakdowns, and I'm going to do 4 setups for you guys. So I'll start off with pound. I look at euro, I look at dollar card, and maybe one other pair. So this week we don't have much that I can say before I go straight to the chart breakdowns. Economic calendar, there isn't much that you expect that will be moving the markets. And also for pound, one reason I'm analyzing pound, which I've not been looking at for quite some time now, is because I believe Brexit dust has been settled for now, and so we can be able to trade this pair at least before the extension deadline is met. So I'll just go straight down to the charts, and we'll start off with the pound USD. So yeah guys, this is the weekly chart on pound USD, weekly chart. So we can start off, first of all you can see I have no levels on the weekly chart. I decided to scrap them off because some of these levels I know them at the back of my mind. You can do that also, but most of you, if you're not aware, just stick to your levels so that you can be able to see. So focusing on what price action has been doing at this point, then you discover that price has been rejecting the 1.3150. There's a pivot point coming in at this level, 1.32, 1.33. You can see the markets have been moving sideways for quite some time, so we can't base any decision about the direction of this pair at the moment based on how the candlesticks are doing, because we don't have distinctive patterns which can tell us where the markets are headed. So going down to the daily chart for us to get clearly what is happening on this pair. So this is the daily chart. At least here I have levels marked. So starting off, I can first draw this trend line from this point, and if I draw this trend line, you discover that the market has bounced off the first time, the second time. This was the third time we tried going higher, but you can see that we are really rejecting the 1.3150 level. So if I remove this line again and try and focus on what price action is doing at the moment, you discover that we have rejected the pivot point. Yesterday's close was somehow a shooting, not really a shooting star, but a candle rejecting the pivot point. And at least I expect this market to sink lower. So if I draw a counter trend line from this point to this point, then you discover we have gotten to this line the 4th time. And this means that if the markets are to complete the market structure, then we will be moving lower. If I go down to the 4-hour chart, we'll be able to see this clearly and in a better way. So I expect this one to sink lower at least to this level. I'd actually not seen the pivot points on the daily. So now I'm more confident of a break of 1.30 and a move lower to touch 1.2850. So this week we're looking for this move, a move lower to touch at least 1.2930 first and 1.2850 ultimately the second level. Fibs are aligning, pivot points are aligning. If I go down to the 4-hour chart first of all, this is the 4-hour chart. The 4-hour chart, I have a good channel bouncing off, a good midline, and finally we can see that we have been moving sideways for quite some time, for almost 3 or 4 weeks, but we've been moving sideways and now we've touched the channel and officially moving lower. Already I'm in this trade, but now I think I'll just move my target to 1.2930. That makes my risk reward 1:3, but if we get to 1.30 and I sense some strong rejections, then I'll be out. So for pound now, I'm looking for shorts, move lower, at least to 2930, 302930, and ultimately 2850. That's my outlook on pound. And actually, you can see that if I extend this, it comes into confluence with the lower line of the channel. So if I was to hold the whole of this trade, that will be about 250 ticks. But I don't think this one will go in a straight line, in a straight leg rather. So we maybe will get some small retracements which I'll use to add into my position if the markets are moving to my side and if we don't get any fundamentals coming in to destroy what we've been looking at. So that's my outlook on pound. One beautiful setups over 250 ticks to the downside. So I'll go down to the next pair. So this is Euro USD on the weekly chart, and on the weekly chart we have a channel which was broken, but we're still playing within the channel. Not really playing, but we're still moving along the channel. So if I draw another trend line over here, which is really drawn precisely, it's drawn better on the daily chart. So for now, what I'm trying to focus on is last week's price action, and you can see clearly we had a 3-pin pattern with an engulfing candle coming in. So this means that Euro could be setting up for going higher, but necessarily if you go back and look at what has been happening, you discover that this is the pattern. We had a drop, then we had 2 candles moving upwards. We had 2 drops, then we had 2 candles again coming back in. We had a drop, and again we had a move back upwards, and again this time we have a drop, and we are having a move back upwards. So I expect this really to be a pullback, and really a drop is coming on Euro. So at least we'll get a break of this level, which has really been key in making this pair not move higher, and I think we'll be sinking lower. So if I go down to the daily chart, this is the daily chart on Euro. I have a beautiful channel over here. So you can see from 1750 all the way to 1550, then we came back lower, and we've been touching this pair, moving lower. So we've been creating very good waves. So on this one, actually yesterday we were talking with Caleb, and I was telling Caleb about how we think some people will be squeezed out of this one. So if you look at it keenly, you discover that the market has already given you a short signal with the formation of a shooting star candle at the 1.13 level. But if you look at it closely from a lower time frame perspective, you discover that the markets might move higher at least to 1350, and the touch of 1350 will also be a touch of this upward channel, and at that point we'll get now the right signal to go short. If you're short at this point in the markets and you have a tight stop, then be prepared to be you might get killed with this move going upwards to touch 1350 because you don't use wide stops. So for us, we're waiting for 1350 to execute shots, probably high setups, high probability setup. This is a very good setup that will be coming in, and you can see that Euro has been bouncing off this channel. The last bounce we rejected the 21-day moving average, forming a hammer, and also the 1300 level, and I expect this move at least to touch R2. So I'm looking for R2 1350 to short. This will be my execution point, and I'll expect the markets to sink lower, probably to 11450, which we've been calling for quite some time now. So that's my outlook on Euro, and I'll now go down to the next pair. So this is dollar CAD, and we'll start off from the weekly chart. So looking at this pair from the weekly chart, we discover that we've been moving sideways. And if I use one of the strategies that you use, the inside bar formation, discover that you have not yet broken out, or we have not yet taken out any of these levels. So 1.3430 and 1.3250 on this lower side. So probably a 200 pip range. So if I go down to the daily chart, you will be able to see this clearly, on the daily chart. That's it. Now this area that I've highlighted, you can see that we've been bouncing 1, 2, then we bounced off, then we came back lower, and now it seems like we're moving higher. So unless we break this counter trend line and take out R1, that's when I'll be looking for long plays on up to R2. But as long as we remain below R1 and we remain below this trend line, this counter trend line, then I'm looking for short plays to 1.30, just like as I told you earlier on our last week's update on this pair. 1.33, however, is proving to be a key level. As you can see, we have tried breaking past this level for quite some time now, and this is just one of that time. Then we had another time rejecting at this point, actually. Then we had another time and another one. So probably 5 or 6 times a demand zone has been rejected. And once a demand zone is this strong, we tend to wait for the breakout to confirm instead of being caught out on the false breakouts and spikes, which really don't add up to anything. They only make you spend a lot of cash on transactional costs. So if you go down to the 4-hour chart on this setup, so this is the 4-hour chart. I've discovered something very good. Last week, actually, I highlighted that we could be getting a move. I had this channel over here, and so I highlighted that we'll be getting a move to touch this channel the third time, then a drop to take out 1.33. So if we get a break of 1.33, then I'll be looking for shorts to 1.3150, as I've told you on the daily chart. But I'll also be cautious because I expect the market can do this. So perhaps we'll get a move to touch this point. Then we will officially now get this move to move lower, breaking past 1.33, because this level looks like a strong level. And I executed this short trade, but unfortunately I never took out my orders at this point. Instead, I was busy doing something else, and I'd not moved my stop past break even. So what happened was I was taken out to this move, which was catalyzed by some fundamentals. We all get screwed up sometimes with the markets. This is normal. You just get used to it. Anyways, looking at this pair right now, we discover that we are rejecting the 1.3390 level, which I can highlight for you to see using the blue line. And you've rejected it 1 time, 2 times, and now this is the 3rd time. Basically, we are turning into a ranging market. We are bounced off 1 time, 2 times, 3 times, 4 times, 5 times. This is the 6th time. So as long as you're below R2 and you give me a short signal, I'll be shorting this one at least to 1.33 first. Ultimately 3,250 and 3,150, because I don't see how this one will be going higher. So that's my outlook on dollar CAD. I'm actually waiting for a better signal, a better bearish signal, to execute a short trade, sending this pair lower to the 1.3250 level. So that's all from us, guys. I won't go to the 4th pair because I don't see a beautiful setup. So I've given you 3 setups. We'll revisit them next week, see how they performed, and hope you guys will be able to make some pips. As usual, comment, like, subscribe, and don't forget to criticize us. That's how we learn, and we love being criticized. Cheers, guys.